Hey guys, Mayne here from Breakout. This is another episode of Payouts of the Week. Every single week, I'm going through some of the trades taken at Breakout from our best traders, and I'm going to reverse engineer them for you, see if we both can learn something from these people who are absolutely killing it. This week, we have another trader from our leaderboard who's up almost $84,000 in the month of August. This trade we're about to go over makes up for a large portion of that P&L. So we're going to be talking about an Ethereum long taken by Weaver Beaver. Let's check it out in the charts and see if we can backtrack and figure out exactly why they entered the position as they did. All right, guys, so you can see the actual trade on the screen here. So Weaver Beaver took a very tight stop loss long here on ETH, effectively catching the entire 4,000 breakout. So they longed just below $3,900 and they rode this to almost the very top of this price leg of this move. Super impressive trade. Now keep in mind with Breakout, guys, we have accounts going all the way up to $100,000, 5x leverage on BTC and ETH, 2x on the other altcoins. This trade in particular was just under $250,000 in notional size. So this works out to be about 55, 56 ETH long. Here's their entry. Here's their stop. This is their take profit, and they just made under $48,000 in just over 5 days. That was the holding time for this trade. So let's see if we can reverse engineer exactly why they took the position as they did. So immediately, the first thing that jumps out to me here is the $4,000 level, right? That's obviously a very key level, and you could just even mark off this high here as that key level. So you have the prior 4K move here, right? We deviated that level, and then on the daily here, that's exactly where price stopped, right? So I could even move this level up or down, but to me, this daily level is where I would be basing the position on. It's also the top of this weekly order block. You can see very much a critical level here, right? Just under $4,000, rejection, deviate above, reject, and then once it reclaimed, it blasted off. So in my mind, that's exactly where I get drawn to, is that daily level. Once we got that daily close through that level, bullish, we're looking to long any sort of pullback. Now on the daily chart, it doesn't look like it pulls back at all, but you got to remember here, this is a daily candle. So we had an entire daily candle close through the level, meaning that next day of price, which in this instance is August 8th, you want to be a bull. So zooming into the hourly, you can actually see here, we got our daily close here on August 7th above the level. And then we came back and we retested the level and then immediately took off. And it looks like they effectively just bought a SR flip here. Price broke through that key daily level, got the daily close. Now, something people always ask me is what confirms a level? Well, you can see if this was an hourly level, as soon as the hourly candle closes through it, I would consider that level reclaimed or broken through. This is a daily level. So the fact that we got the daily close through the level here, that tells you that this is a significant closure, and that level now could be turned from resistance to support. Now, I totally understand the entry here, right? The entry is just a pullback towards the level. We just got that daily close, as I mentioned. That's great. What's interesting to me here is the stop loss placement. Now, this is a very tight stop. Looking at the chart here, this is a 1.5, just under a 1.5% stop on a pretty big position. So going back to the profit and loss calculator here, right? If you were to lose 1.5% on this position. So we'll put the take profit back up here, just roughly. They have the stop loss at 3.833, and this is about 55 ETH position. Because the stop loss is so tight, the projected loss was only $3,000. So as much as visually you're like, man, that looks so tight relative to how far price went up, at worst, this position was going to lose $3,000. That's well within the daily drawdown. That's obviously well within the maximum drawdown as well. And the potential upside ended up being huge. But in reality, I mean, this could have been a 2R trade. And then if it just went to here, this is $6,000 potential profit. This is a 3K risk. That's your 2R. That's still a really good trade. So while the stop loss is tight and the position size is relatively large, it worked out perfectly in this instance where they were able to have a clean invalidation and ride this thing to almost the high. Now, if this were me taking the trade, I'll be honest with you, I probably would have had my stop loss a little lower. What I see jumping out at me here is this order block is likely why they put the stop there. there. So you had your daily close through. There's your hourly retest, right? So there's your hourly break, retest of the hourly OB, and they put their stop loss just below it, giving it a little bit of breathing room. I don't hate that whatsoever. Me personally, I probably would have had my stop loss below here because this sweep, you guys know how I like to trade. I like these sweeps as an area of invalidation. We ran that low. We shouldn't come back there if we're going higher. So I probably would have had my stop loss down here, which in turn makes the trade not as good of a risk reward. It cuts it in about half. So instead of having a 1.45% distance to stop, to almost 3% now. So instead of risking $3,000, this would have been $6,000 risk with the same position size, but I potentially would have reduced the position size to allow for this wider stop. But that's where I would have had the stop. But Weaver Beaver has much bigger coconuts than me apparently, because they had the stop just below here. Still, in hindsight, looks genius because it worked out. But me personally, I would have had it probably a little bit looser because, you know, this could have come down on the hourly and then still closed the next daily candle above there. All in all, though, this is a fantastic trade. And the exit, let's talk about the exit as well. Once price had this expansive move away from their entry, a lot of people would have probably closed some here. I know I would have, especially if my stop loss was this tight. Keep in mind, at this first consolidation, they're already up 6 to 8R. But Weaver Beaver held the entire thing till almost the very top of this move, and then they exited before price even rolled over. This is unbelievable trade management. I don't know if they had a specific target in mind for this trade, but they nailed it and they exited near the absolute pico top of the move. And I can't even tell you with confidence that I would have held a great entry like that with that tight of a stop all the way up here. I probably would have scaled some off here, brought my stop from here up to here, and then maybe scaled off. And then once we started rolling over, you get this kind of rounding 3 drives price action. Maybe that's your sign to get out. But overall, unbelievable trade. Just under $50,000 in profit in 5 days. And only at Breakout can you take a trade with this kind of size and know that you're going to be paid out on that size on demand. We don't care how big the payout is. If you're profitable, you make the money, you deserve the payout. So unbelievable trade here by Weaver Beaver, who is in second place, by the way, on our P&L leaderboard for the month. They're about $15,000 back of Aaron, who we did last week's video on. Still lots of time left. So make sure you're following along on the leaderboard. Remember, the top 10 people on both volume traded and P&L get additional cash prizes. So if you want to participate, trade with us, scale up your trading, get your payouts on demand, climb the leaderboard, compete with these other fantastic traders, check out breakoutprop.com. That's all I got for this week, guys. I'll talk to you in the next one.